Maybe ES keeps rocketing though. I'm just gonna start playing all my end of day zero DTs on ES instead. It seems so much better. Because the MM always finalizes the fucking move after the market closes. Well, I got obliterated on GME and Nvidia, and I won't all day at SPX. Time to retire from GME. Fair enough. Alright. So a bit of a rejection today, and then we bounced back. Not exactly an inverse head and shoulders, but an attempt at one. This puts us pretty much in the same position we were at Friday on Friday's close, where we're still in the negative gamma environment. We still have to deal with that big pile of sold calls to the upside, and honestly, like we could just fail here and drop right back down again, especially if the sold put positioning isn't supportive enough, or tomorrow's data is bad. And tomorrow we have jolts, which is kind of a big deal. We also have factory orders and the tip economic optimism index, which may be a little less important, but jolts and factory orders will be pretty important. Especially if we see a rise in factory orders. That would be very bearish, especially after today's ISM print kind of hinted at some contraction. It's still very uncertain, right? Because the S&P PMIs show manufacturing expanding. They're less robust than the ISM data set, but they are more current than the ISM data set. Anyway, broad commodities got hit pretty hard today. Big drop in oil. Oil down, or light crude down 3.83% today. To 74, which is I think the biggest drop this year. Yields and dollar both down pretty hard with the ISM contraction. We've got the 10-year back below 4.5, 5-year back below 4.5, and the 6 months fell off of the 5.4 level. Dollar declined almost 50 bips. Euro and pound up, and then yen and yuan up against the dollar as well. Correlation today actually did break down a little, though, at least the short term correlation. And we saw a little bit more vol shorting on the 3 month. So a little further out, we're seeing some of that short vol positioning roll out. And that may have contributed to us destabilizing intraday as they de-risked the shorter dated short vol positions. Big drop in the USD JPY synthetic swap that we track, and a little bit of a turnaround in the forward yield on volatility, although that's remaining quite sensitive. And any further inversion in the yield curve is probably going to tighten that right back up again. Bond vol's probably going to be elevated. Skew looks like still not a lot of tail risk hedging, but still a lot of short calls to the upside, which can kind of with that data. Starting off the week at negative 33.6% correlation between the VIX 3 month and cash, or the VIX futures contract in front and cash VIX. This is a pretty big drop off of Friday, where we're at 37%. And increased correlation means we're likely to see more and more long vol positioning, right? Rate cuts, or Fed fund futures, are now pricing in 0.31 cuts for 2024. So the ISM data today added a little bit of a chance that we see slightly more than one rate cut this year. I don't think that's true. I also think ISM services data is probably going to be hot, and that's just going to reverse this. So, I mean, bulls really need everything to shake out perfectly this week. Not only do they need the PMI prints to be good, they're really going to need to see more contraction in labor, right? That gives the Fed some confidence to cut rates, and we're probably going to need to see the EU do nothing. And there's still a very, very high chance that the EU cuts rates at their meeting this week. And if they do, which is Thursday, if they do cut rates, that's gonna present a divergence in central bank policy. So if they go to 4.25, that's gonna see the dollar and U.S. yields rocket. Yeah. So we'll see how it all shakes out, but I'll see you guys bright and early tomorrow. I hope everyone had a good day. Later.